Okay, let's thumb through the ratio charts. And I know a lot of these are slow moving, and I know that you've kind of got the points on this, but well, I'm going to talk about it anyway because these are beautiful creatures, and I think it's time for a bit of an update. One broad conclusion from all these, as you know, is bullish precious metals, bearish equities, and that's really continuing to play out. Here's the all world index divided by gold. It's just absolutely magnificent. We had a push higher, and now we're starting to weaken again. And God willing, we will cut below that that low that we had seen down here around April 21st, which would set off really a world-changing move. There's Duke. There's Duke. He's announcing silver. There's all world divided by silver. Same idea, but not as close to a failure. I use failure in a non-pejorative sense, of course. It's success to me. Here's the Dow Jones Composite divided by silver. Same idea. Nicely working its way toward a failure. This is the NASDAQ 100 divided by the Russell. Now, this is a horse of a different color. This is simply showing the strength of tech stocks versus small caps, which has been, of course, obscene. And this has moved up 400%. Duke, please. 400% since June 2006 in terms of relative strength. I'm not going to apologize for the puppy's behavior because he's a good boy. Here's the Russell divided by gold. Another hard fall. I think he's screaming at the robot, if you're curious. There's a robot cleaning my floor right now. And here's the Russell divided by silver. Same idea. And those two have failed already, as you can quite plainly see. The Russell's been quite weak. Good heavens, Duke. Okay, we get it. This is the S&P 500 divided by the GDP. As you can see, mashed right up against it, which implies a multi-year drop, which would be thrilling. This is the S&P divided by the money supply, I think. And it too, as it did here and here, appears to be hammering out a lovely top there. I mean, if these all complete, it's going to be huge stuff, like multi-year stuff. And I can't imagine what the public will do to the inhabitants of Washington, D.C. if this transpires, as I'm hoping it will. This is the S&P equally weighted index divided by the normal S&P, showing the importance of the breadth breakdown. And it is breaking down, buddy. It keeps the wealth of prosperity keeps attempting to spread to other stocks in little coughs and bursts and wheezes, but it's not taking. On the whole, junk like Meta and Google and Apple, they're all holding this this house of cards up, and the other 480 stocks are doing so great. Transports divided by money supply also. This has stayed neatly within the confines of that triangle. Oil, of course, this is a very different creature these days. This is the oil index divided by the money supply, and it has been recovering for obvious reasons. I mean, I'm recording this on Saturday afternoon while the battle still rages between Israel and Iran, and I see Israel has sent us an embossed invitation to join the war, so we'll see how that goes. But yeah, I'm 100% out of energy. This is the CompQ also divided by the money supply, rather high in that ascending and expanding wedge. This used to be the what we call the mice, the most important chart ever. It's not, but it's interesting, and it's essentially showing the S&P divided by the 10-year yield. And for decades and decades and decades and decades, it's stayed nicely between those two barriers. Things have changed. Things broke down in 2022, and they've remained beneath it ever since. Here's the XME divided by GDX. Good God, Duke, shut up, please. That is the mining ETF divided by the precious metals mining ETF, and that looks headed much, much lower. In other words, bearish XME, bullish GDX. Here we have gold divided by, and forgive me because these symbols are insane, I'm not going to remember all of them. I think it's the CPI, but as you can see, gold's doing just lovely. And the rest, pretty much all the rest of these are precious metals related, except for the last one. Let's just thumb through them. Here we're at the gold versus the S&P, the spider, doing great, obviously. Gold just kicking the spider's butt. Here is gold divided by the US dollar. Sensational, absolutely terrific. Yay gold, yay gold. Silver gold ratio. This took a hard tumble after the break. We bounced all the way up, and what do you know it? We're moving away from it again. Interesting. I don't know how to trade that, but it's interesting. Here's the silver versus the spider. Hasn't quite broken out yet, and this is the kind of exciting part, because if you compare this, which is long ago broken out, to this, which might break out, maybe there's still an opportunity there. Here's the silver versus the US dollar. Clearly doing well, but not as well as gold, you know. Remember that, how much farther it's gone. And finally, totally different creature, but terribly exciting. The spider versus bonds. Failure. We've clambered back up. We're just teetering on that line. This is a sea change. This is a monstrously important chart. Yeah. Nobody talks about this except slopes, so very important. Anyway, quite the journey. Very exciting times we live in.